Hi everybody, today I'm going to go over our 2021 Bay Area housing market forecast and give you an answer to the age-old question, when is the best time to buy a house? You're probably wondering, since when does this guy have a crystal ball? Why, I don't. But I'm going to share with you some of the market fundamentals that are driving this market and give you some perspective on what's going on right now. Hi everybody, this is Michael Soldana with the Vang team and the real estate experts. Bottom line up front, I don't have a crystal ball that's going to magically tell me what's going to happen in the next 12 months. But what I can do is share with you the fundamentals that are driving this market higher. Barring the start of World War III or some other similar and horrific event, like if the sun just decided to go out suddenly, permanently. I don't think those two things are going to happen. So you are in good shape. I think we'll be all right for the time being. Let's get started.
All right. Right now, as I'm sure you know, our world is changing. COVID
has changed the way that everyone lives and does their business in 2020. Now we're in 2021 and we're trying to figure out what's going on. We are in the midst of the most significant shift in how we live and work since the Industrial Revolution. Around 1800, let me make this smaller, we went from farms to factories. 1950, we went from factories to office buildings. 2020 now, we've transitioned from working into the office to working from home. People are moving everywhere. What does this mean? How many people? It's a lot. Before COVID started, only about 20% of people said that they would want to move. And now after COVID, look at this. If you lived in an expensive area now to access work, but could go to all work from home, would you move to an inexpensive market where you could buy your dream home, have access to a better school district, or have other amenities that you dreamed of for a lower cost? 55% of people said that they'd be willing to move. Get rid of that expensive home that's a 5-minute commute from LinkedIn or wherever you might work, and go somewhere that has better school districts, maybe a little bit of land, a little bit of space, a little bit further away from the hustle and bustle. The Zillow CEO put it out that we are in the midst of the great reshuffling, where we are starting to challenge our norms, change the norms. More people are working from home. We need more space, and you might need to downsize, upsize, or just get closer to family. Here's our 2020 market recap. Sales, the number of homes sold, hard to believe, but it was 33% up from the previous year. To offset that, the number of homes available is down by 21%. Real estate is a supply and demand market. Sales go up, demand goes up. It's just like toilet paper. If there's only one roll left, people are going to pay a lot of money to have that. And because of that, we've seen our median price point in the Bay Area go up on an average of 13.4%. That is huge. That is more than double the national average. And that's why they call it, this area, the real estate Garden of Eden. Days of the market is down by 48%. So right now we're seeing homes sell between 7 and 14 and 21 days rather than between 30 and 40 days, which was about the norm for last year.
Bay Area home equity has been skyrocketing. On average in 2020, homes gained about $170,000 in equity.
The current average equity of mortgaged homes is about $650,000. 15.1% of homes are owned free and clear. That means there's no loan, completely owned by the owners. And overall, there's a 13.4% increase in equity, totaling over $150 billion. Our forecast for 2021 is looking like this. It's going to be on fire, guys. Real estate is driven by supply and demand, tempered by interest rates in the stock market. I'll go over the 4 factors that will drive this market in 2021. First, work from home has doubled demand. I know we've talked about the exodus from the Bay Area, but now that things have started to settle down, we've heard from a lot of the big tech companies that people are going to have to start going back to work soon. Once the vaccine is out there, once we've started to get back to normalcy, I think that we're going to see a continuing increase in demand. Take a look at this quote by the president of Homes.com. The surge in the work-from-home population has rewritten the playbook for many home buying and rental decisions, from when and where to relocate to what people are looking for in their next residence. The second factor that's driving home prices higher is that supply and inventory is the lowest that we've seen in 3 years. If you take a look at this chart, we're basically seeing what we saw in early 2018, which was an extreme squeeze in the amount of inventory. Even since July and October of last year, we've got less than half the amount of homes on market available in the city of San Jose and some of the surrounding cities as well. The third factor that's driving up prices are interest rates are near all-time lows. I was talking with somebody just a few days ago where he said something that really struck me, that interest rates are so low that money is practically free. It's free money. You get this money, you put it in a house in the Bay Area, and it'll grow by 13% in 1 year. Wow, that's something. Look at this. Mark Fleming, chief economist at First American. Rising interest rates reduce house buying power and affordability, but are often a sign of a strong economy, which increases home buyer demand.
By any historic standard, today's mortgage rates remain historically low and will continue to boost house buying power and keep purchase demand robust. Wow, very cool.
If you look at this is a quick graph of the last 5 years of rates for our 30-year fixed mortgages. Even 5 years ago, this rate of 3.97% was still pretty low, but nowadays we find ourselves a little bit lower, 2.6. It's actually a little higher now. I just read we just got over 3% interest rates for the first time since 2020 July. They're going up. And the fourth factor that's driving prices higher in 2021, the stock market, also at all-time highs. Look at this. The NASDAQ rose by 47% in 2020. And one of the big motivating factors for this rise was the CARES Act. As some of you may or may not know, back in 2008, when we bailed out all the big banks, they put about $800 billion into the economy. And in the CARES Act, to fight against COVID and all of those effects, the government has inserted $6 trillion into the economy, accessible to small businesses, to large businesses, as well as individual citizens. And what we've seen in the past is that when you have this money in the economy, people will buy things, they'll do things with their money, but it will all eventually gravitate to stocks and real estate. All right, so what does this all mean? What is the crystal ball that I don't have? What is it telling me? This is our 2021 market forecast. Based on the market fundamentals and the driving factors, we predict that home prices in the Bay Area will rise up to 13.5%. This is the same amount that they rose in 2020, and we predict 2021 will be at least as good. Inventory will continue to remain low due to the work from home demand. Just like I discussed, we have the Bay Area exodus going out, but for every person that goes out, there's 10 people that want to live here. Trust me, there's 10 people that want to live here for every person that leaves. And as a matter of fact, a lot of people that left, they're coming back. I know at least Google is telling their people it's time to come back to work. There's a lot of the big tech companies are having people come back to work in person. And the third major factor, interest rates. We're seeing that interest rates will rise as the economy recovers. We've already started to see that rise happen. Just this last week, I think I said it already, we saw interest rates go above 3% for the first time since 2020 July. That's a big change. So because of those factors, you need to ask yourself, is your first home starting to feel cramped? Is it time to get out of your starter home and get into something that's got 3 or 4 bedrooms? Something where you've got 1 office, maybe 2 offices, enough room for you, your wife, your kids. Use all that equity that you've been saving over the years. I know you pay your mortgage payments and sometimes you don't know where it goes, but trust me, the majority of your mortgage payment is going to pay off your principal. That's practically money in the bank. And if you work with us, the Amanda Vang team, we have some very special vendors and lenders and programs that can help you buy a new house without having to sell your old house first, but still allowing you to leverage that equity. And we can get you qualified often more than what a traditional bank can offer. So let us know if that's something you might be interested in. On the other end of the spectrum, thinking about your first home purchase, take advantage of the low interest rates. Right now, someone said it to me, it's practically free money. It's not free money. It's almost though. At 3%, if you can take 3% investment, like the 3% rate, and invest it into a home that last year went up 13.4%, how can you go wrong? You're going wrong by not buying a home, right? But don't be afraid of the competition. Have a good real estate agent by your side, like us, Amanda, Vang, Michael, real estate experts, and don't be afraid of the competition. We had a buyer that we just got into contract last week where we beat out 6 offers. We didn't even have the highest offer price. We were $20,000 short of the highest offer, but because of good negotiation, good structuring of our contract, and good terms, we were able to convince the listing agent that our offer was the best offer. And they took it and left someone very disappointed that was willing to pay more, but we were able to say and do and make the right things happen that put us on top. Very proud. So now I get to answer the question, when is the best time to buy? And you're gonna kill me because I built it up, and the best time to buy was yesterday. I'm serious. Look at this. This is a chart of Bay Area real estate over the last 40 years. Inflation adjusted. The biggest thing, dot-com pop in 2001, a 10% drop. The subprime mortgage crisis. This is probably the biggest financial crisis that we will see in our entire lives. Like I said, barring World War III or the sun just decides to go out suddenly, permanently. No, all things considered, this subprime mortgage crisis that occurred between 2008 and 2011 is the single worst financial event that could have possibly ever happened. And I can tell you a real story. I know we know somebody that purchased their home right here, right at literally, maybe you could call it the worst time. A home it was worth $800,000 in a very nice part of San Jose, and
over the next few years, it went down in value. That right here at the trowel, it was worth about $500,000, so minus $300,000. But
every month they made their mortgage payments. They built up that principal. So even though the home might only be worth $500,000, with 5, 10, 20% down and 5 years of steady mortgage payments, that thing probably had $300,000 or $400,000 of equity, right? And sure enough, what happened over the next 10 years? We looked at the valuation. That house is worth $1.6 million now. No joke. So that's what I'm telling you. That's what I'm saying. And that's what I mean when I say that the best time to buy real estate, it was yesterday. It's always going to be that way, at least in the Bay Area. When you have a chart like this, there's an analogy that we like to use. It's called the real estate escalator. When you were a child and you saw your first escalator and you walked up to there and you said, man, this thing's moving really fast and the steps, they just keep going further and further away from you. It's really hard and you just keep seeing it go. But what I can tell you is if you have a good real estate agent by your side like us, we can help you take that first step. It might be a big step, but as soon as you get on that escalator, I guarantee, and it's not even my guarantee, the data shows it. In the past 40 years, this is a solid investment, Bay Area real estate. The next question that I'm going to answer is, will this market crash? Well, once again, like I said before, I have no crystal ball, but let me show you some fundamentals that make sense to me. Affordability in today's real estate market. So like I mentioned previously, affordability in 2006 was a huge problem where the prices of homes were going up so fast that wages weren't able to keep up. If you look at the typical mortgage payment today, inflation adjusted of $3,800, it is far short of what we saw in 2006, which is a $6,000 inflation adjusted mortgage payment. This will make a little more sense as I show you the next few graphs.
Once again, this is the housing affordability index. Low numbers are bad. Low numbers mean that houses are not affordable. So you can see that we had a trend
of affordability going down 03, 04, 05, 06, and then the crash. And then everything started to get released in 2009. We started to have a lot of distressed properties, a lot of foreclosure sales going to the market. And now we find ourselves in 2020 where houses are pretty affordable. I know that we look at what we think of astronomical house prices in the Bay Area, but overall, nationwide, and even in the Bay Area, the cost of homes versus the wages that we make, it's still very affordable. Here's another quote, Lawrence Yun, the chief economist at NAR, National Association of Realtors. But given the huge price gains recently, I don't think many homes will have to go to foreclosure. I think homes will just be sold and there will be cash left over for the seller, even in a distressed situation. So that's a bit of a silver lining in that we don't expect a massive sale of distressed properties. What happened in 2008 was that there was a lot of homes with very little money down, no income, no job. And as soon as the market turned just at the tiniest bit and the homeowners started to fall behind on their payments, we didn't learn our lesson. That was the time that we learned the lesson that, If you've got these underwater homes and a lot of them, that people are just going to turn the keys in at the bank and say, this is your problem. I'm $100,000 underwater. I'm just going to walk away for zero, take the hit on my credit, and then we'll figure it out from there. What I can tell you now is that things are very different. Based on the slide that I showed you before, the average Bay Area home has $650,000 in equity. So there's no just turning in the keys. If you can't keep up with your payments, you're probably sitting on 10 or 20% of equity, and that's worth a lot, especially with demand where it is in the Bay Area right now. Here's another graph, number of consumers with new foreclosures. So talking about the foreclosure crisis, there was a ton of foreclosures. 566,000 nationwide. And it's so funny to look at the foreclosure numbers recently. There's barely any in the Bay Area. Barely any. Like I have access to the online systems. There's like tens, hundreds. That's it. And as of 2020, quarter four, only 14,220 homes were in foreclosure nationwide. That's good. We're in a good place.
Here's another one. 78% of all homes in the Silicon Valley have at least 50% equity. So this ties into the slide that I showed earlier where up to
11% of all homes are owned free and clear. That means no loan, fully owned by the owner. They can do whatever they want. And the average equity of the mortgage homes is about $625,000. So just to reiterate, this is the 2020. This is our 2021 forecast. Prices will rise up to 13.5%. Inventory will remain low due to work from home demand, and rates will rise as the economy recovers. All right, everybody, thanks for listening today. Like I said before, I don't have a crystal ball. Nobody does. But what we do have is a very high level of real estate expertise and technical knowledge. We have the strategies and experience to ensure that you're making the right decisions with the most important purchase in your entire life, your home. So if you have any questions, get in touch with us. This is Michael Saldana with the Vang team and the real estate experts. Here's to 2021, a great year and success for everybody. Take care.